Are you setting goals for your business based on real numbers or are you just guessing? A lot of small business owners have goals like I want to make money, I want to grow, I want to feel less stressed about cash flow. And these are great desires, but they are not quite goals yet. How do we turn these into actual goals and where do we get the information to set up a good framework for your business? Hello, C Squared Collective, and welcome back to our series, Spring Clean Your Finances, Planting Seeds for Better Financial Habits. This series is a practical guide in cleaning up your books, planting better financial habits, and preparing your business for smoother taxes next year. If this is your first time joining us, welcome on in. Each episode is designed to stand out on its own and give you practical, actionable tips on the topic at hand. But if you would like to dive deeper, be sure to check out the rest of the series or some of our other videos in the description below. As always, if you have questions, drop them in the comments or reach out to us directly at connect@c2accounting.net. So grab your beverage. Today I have a matcha, and let's get started. Today we are talking goal planning for your small business. This is less of a QuickBooks tutorial like we usually do and more of a financial planning conversation. But your books still matter because your books are where all the clues live. I will note we are not a financial planning company. We are accountants who work with so many small businesses and nonprofits. This video is meant to be an overview with some practical tips and help you get started on goal planning for your organization and a tool if you cannot afford to or don't have time to work with a financial planner. Let's first talk about goals in general. Real business goals need to be specific, measurable, achievable, relevant, and time-bound. That is the classic SMART goal framework that so many people use. In translating this to goal planning for your business's finances, however, this means that your goals should be clear, tied to actual numbers, possible for your business, connected to what matters, and have a deadline. And the best place to start is not with what you hope will happen in the next year or whatever your goal planning for timeframe is. The best place to start is by reviewing what already happened last year. This first step is what we like to call a garden check. Before you plant new seeds, you need to look at what grew last year, what struggled, and what may need to be pruned back. This means that all of your reports should be pulled, that you should review them. So we recommend starting with your profit and loss, your balance sheet, any sales reports, any project reports if you use them, and any customer or service reports that apply to your business. So take a look at last year compared to the year before. We also recommend looking at the percentage and the dollar difference too. Let's briefly pause here and I'll show you how to set up some of these reports if you use QuickBooks Online. If you go to Reports and then select the report that you want to set up, so for this example, we'll do a profit and loss statement. You're going to set the date to last year and then add a comparison to the previous year. So for example, we're looking at 2025 compared to 2024. You're also going to want to select dollar difference and percentage difference. But what do we do with that information? This becomes knowledge that we can analyze. For example, if your revenue increased by $20,000, that sounds amazing. But if your expenses also increased by $25,000 during the same time, while your business may have grown in gross revenue, it became less profitable overall. So ask questions like, did revenue go up or down? Did profit go up or down? Did overhead expenses go up or down? Which services or products performed the best? Which customers or clients were the most profitable? And were there any services, products, or clients that took the most time but gave the most in return? Next, we recommend reviewing your key metrics before creating any new goals. So these are revenue, expenses, profit, and cash flow. Those 4 categories will give you a very strong foundation. But depending on your business and what your business provides, you may also want to review things like project profitability, customer profitability, labor costs, cost of goods sold, and when you had to pay vendors, and also how long it took for customers to pay you. If you use projects in QuickBooks, we recommend taking time to review whether those projects were actually profitable. Also, if you track expenses by customer, you will be able to pull a profit and loss statement for each customer. That can help you see which clients are helping your business grow and which ones may need some better pricing, clearer boundaries, or different processes. We also recommend looking at your cost of goods sold, or COGS. These are usually the direct costs connected with providing your product or service. So for example, hair dye for a hairstylist. In many businesses, COGS generally should move with revenue. So if sales go up, those direct costs may also go up. If sales go down, then they may also go down. The key is to know what your target percentage of revenue should be for your specific industry. Operational expenses are a little bit different. Things like software, rent, insurance, administrative costs, professional fees may stay more steady from year to year until you've expanded. If those expenses are climbing quickly, it's worth it to sit down, look at them, and ask why. Also, if you invoice customers, review how long it takes for them to pay, especially if you have to pay vendors for their direct costs. This is a big one. You can have really strong sales and still have cash flow problems if money is coming in too slowly. Now, let's talk about turning vague goals into smart financial goals. Instead of saying, I want to grow, you might say something like, I want to increase quarterly revenue by 10% by the end of quarter 3. Instead of saying, I want to spend less, you might say, I want to reduce recurring software subscriptions, very specific, by $100 per month by June 30th. These are goals that we can actually measure. A very simple way to organize this is to separate your goals into 4 categories: revenue, expenses, profit, and cash flow. You can even make a simple quarterly chart. I made an example one, and we can walk through it together to give you some examples and maybe give you some inspiration about what you might want to do for your goals. For revenue, your quarter 1 goal might be reviewing your top selling products and services. Quarter 2 might be adjusting your pricing and promoting your best performing service. Quarter 3 might be to increase sales by a very specific percentage and achievable. Quarter 4 might be to review what worked and start planning for next year. Our C-squared tip here: review whether your pricing still reflects the value that you deliver. Many small businesses undercharge without realizing it, and even a very small rate adjustment can meaningfully impact your bottom line. For expenses now, quarter 1 might be reviewing subscriptions and recurring charges. Quarter 2 might be renegotiating contracts or cleaning up any unnecessary spending. Quarter 3 might be checking whether expenses are still aligned with revenue. And quarter 4 might be preparing your budget for next year. Another C-squared tip here: compare your key expense categories to the industry norms. So, quick Google search can help find that out. If a line item looks very high or low as a percentage of revenue, then it could be worth a closer look. For profit, some examples of goals for quarter 1 might be reviewing margins. Quarter 2 might be improving pricing or reducing a low-value work. Quarter 3 might be tracking project profitability. And quarter 4 might be comparing your net profit to last year. So a C-squared tip here is keep an eye on your profit, not just your revenue. Very small shifts in margins or project performances can add up quickly, and catching them early gives you options. For cash flow, some goal ideas for quarter 1 might be reviewing how quickly customers pay. Quarter 2 might be setting aside sales tax and income tax monthly. Quarter 3 might be building a rainy day fund, or even just planning to build a rainy day fund. And quarter 4 might be planning ahead for slower months. Our C-squared tip here is take a close look at the timing between when you pay vendors and when you collect from clients. If there's a consistent gap, that's a cash flow risk worth addressing, whether through faster invoicing, deposits from your clients, or adjusting payment terms. Now, setting these goals needs to work for your industry and your business. A construction business may need seasonal cash flow planning around project timing. A real estate agent may have some variable income where some months are great and other months are quiet. A retail business may need to plan around holiday inventory. A seasonal business may need to build reserves during busy months to carry through on the slower months. This is why goal planning should not just be annual. You should build your goals based around your seasons for your business and industry type. If your business has a busy season, plan for it. If your business has a slow season, plan for that too. Cash flow issues often happen when owners forget that income and expenses do not always arrive evenly. And do please remember, sales tax is not your money. If you collect sales tax, set it aside monthly. The same principle applies for personal income tax. Do not wait until tax time and hope that the money is there. Build it directly into your rhythm. The same thing goes for a line of credit. The best time to apply for a line of credit is when you have money, not when you're desperate for it. Planning ahead for rainy days is not negative thinking, it's just wise stewardship. Here's another important piece. Do not set goals that your books cannot track. If you want to know which projects are profitable, you may need to use projects in QuickBooks or another tracking method consistently. If you want to know which customers are profitable, you may need to track income and expenses by specific customers. If you want to compare service line items, your chart of accounts or reporting structures need to support that. This is where you may need to ask yourself, do I need to pivot on how I track my books? However, not everything needs to be overly complicated. But if a goal matters and matters to you, your books need to be able to measure it. Otherwise, you will be guessing again. Finally, our last tip is to create a simple monthly review rhythm. You do not have to spend hours and hours in your books every week, but you do need to invest time, especially every month, so that you know how you are doing. Once a month, set aside time to make sure your books are up to date. If you are working with a bookkeeper or us, make sure you are submitting your monthly receipts, your bank and loan statements, and any other information that they may need. Then you want to review your profit and loss, balance sheet, your cash flow, your accounts receivable, sales tax, personal income tax savings, and progress towards your goals. If you would like a partner to help you stay accountable on your goals, monthly goal setting and reviewing are services that we do offer. We recommend asking yourself every month, are we on track? What changed? What needs attention? And what needs to be adjusted before it becomes a bigger problem? Goal planning isn't about getting it exactly right from the start. It's about creating something that you can work with, revisit, and refine as you go. And when you use last year's numbers to help guide this year's decision, you stop guessing and start growing with intention. So this week, your challenge is to pull last year's reports, do your garden check, and choose 1 or 2 financial goals that are specific, measurable, realistic, relevant, and time-bound. Start small, stay consistent, and let your numbers help you plant better seeds. And this was the last episode of our series, Sprinkling Your Finances, Planting Seeds for Better Financial Habits. But next time, we will be introducing our brand new series, Payroll in Bloom. We're talking about how to grow your team with confidence. Do remember that strong financial habits do not grow overnight, but with clean books, clear goals, and consistent care, you can plant seeds for better financial habits. Make sure to follow us on all of our socials that are linked below for more information on our upcoming series or to check out our other content. If this video is helpful, be sure to like, subscribe, and check out the rest of the series linked in the description below. If you have questions, drop them in the comments or reach out to us directly at connect@c2accounting.net. Don't forget, keep learning so that you can be rooted in wisdom and grow with